I remember, Mayuresh, speaking to you about the IT sector over the last 1.5 years, and you've largely stayed away from this space. You've cautioned investors largely. You have, despite any of the positive triggers, you were not too keen to aggressively go in and buy the dip. What have been the reasons so far to stay away from the IT? And is this adding on to that reason once again, despite the fact that we have some positive triggers from the US?
No, so I think the premise was pretty simple, Sakshi, that the kind of automation and capital infusion that is happening with a large part of the major IT product companies, that is still going to continue. So they are not going to stop. I think it's just going to be more fierce in the next few quarters as we speak. And therefore, as this entire automation race continues, it is going to rattle the sector as a whole. That's one. Second, I think outside US, I think China is having a huge say when it probably comes to AI product platforms as well. I was just sitting across with somebody over the weekend, and they were saying that China is producing some brilliant stuff when it comes to automation and AI. And therefore, services, which has been an integral part of not just the Indian ecosystem for our IT companies as well, are facing serious competition threats. And therefore, I think our IT company models have to evolve. It's as simple as that. We just can't simply rely on the simple outsourcing, outprocessing model a couple of decades ago, which gained us significant market share and services revenue as well from an export perspective. But I think our IT companies need to start evolving in terms of ensuring that they embrace AI and probably have some element of AI, at least in terms of the application layers that they're about to present.
So, Mayuresh, all those investors who have been building on their positions in this underperformance of IT sector over the last 1.5 years, thinking that good times will return once the US-India trade deal is signed and once things improve on the economic front as well, what should they do now?
No, so I think things are not going to drastically change, actually. Let us be also cognizant of the attack. Like we speak about power, right? That renewables and EV will just take over. It's not going to happen. It's still going to take its time. And therefore, in the IT sector as well, this is going to take time. Obviously, the pace at which Agentic AI agents are being used, the layers are being deployed, is pretty fast. And therefore, I think the entire premise that I'm trying to build up is that our companies cannot take it with laxity, that we'll do it after a few quarters. Let us look at some organic acquisitions. Inorganically, we'll start upskilling our employees to a certain extent. And therefore, I think the kind of ecosystem that is now getting created, independent system as you're putting on your screens as we speak, the codes are easily decipherable by coders across the globe. So there is no need in terms of a clouded internal coded system which just gets within a closed environment. I think it's an open environment where people can plug and play and create more tools within the tool that is probably getting created for their own end application uses as well. I think that is where companies need to gear up. And therefore, I think the model might continue over the next 2 to 3 years, no two ways about it. But if you start thinking down the line, I think 5 years, 10 years down the line, you need to start thinking now so that the changes are visible in terms of the business model diversification that our IT companies can present itself 5 years down the line.
If you like the video, do like, comment, share and subscribe.